there, folks. Sean Broderick from the Oxford Club, and I'm here in Vancouver at the Sprott Natural Resource Symposium, and I'm speaking to Ryan King. He's the Vice President of Investor Relations for Newmarket Gold, which is a fascinating Australian producer. He was just going to speak to you guys about what he sees as really driving precious metals prices. Because I know you hear from me all the time, but it's nice to get the opinion of other people as well. Ryan, could you speak to my subscribers about that?
Absolutely. You know, I've been working in the precious metals business now for almost 15 years. Because of the cyclicality nature of this business, you're very much paying attention to macroeconomics, and I think that's what's driving gold and what's driving the investment into gold. You know, gold is used for a very small amount in technology, very small amount in sort of industrial uses. Much bigger in jewelry, obviously, and much bigger in for investments. And I believe the investment side of the business is really driving this now, and it's acting much like a currency. And so historically, if you look at the price of gold, it's always been inversely related to the U.S. dollar. And over the last number of years, of course, it's been choppy. Particularly this year, it's starting to rise, and I think that has a lot to do with the fact that in various nations around the world now, we're seeing a lot of instability, riddled with debt, which is causing some unrest and uncertainty. And in terms of trying to grow those nations, they're going to negative interest rates.
Yes, negative interest rates. I've written about this a lot, but please give your opinion on this.
Yeah, and I mean, you're probably much more in tune with the business and actually the negative aspects of those interest rates. But I'll just say that when you have a negative interest rate, your cash is losing value when it's sitting in the bank. Whereas if you invest in gold in this environment, you're going to have, at least you're not going to be losing money when you're paying interest rates.
Right. One thing about it is that many bonds over in Europe now have negative yields on them. It used to be there was a carrying cost of owning gold, because that money you put in gold, you could always put in a bond from, say,
GIC or something.
Yeah, right, exactly. But now that carrying cost is gone. That just lifts a weight off the price of gold. That's the point that I always emphasize.
Yeah, and with seeing that now, I think you're seeing investors go, well, this doesn't make any sense for me. None at all. And so I want to invest in something that's going to at least be stable and retain the value. Okay, it might not be paying me a coupon, but at least it'll retain the value. And so, and particularly this year, we've seen such an inflow of funds into gold ETFs and gold equities because of this reason.
Yeah.
And I think that's driving it. And at the same time, I think that we're also seeing an interest back into gold as a safe haven because of the instability in the world. You know, global economy is very shaky. I think you look at the United States and the amount of debt the United States has, it's just troubling. And at some point in time, this is all going to come to a head. And I believe that investors are going to safer currencies. And oddly enough, over the last number of weeks and months, we've seen an increase of the U.S. dollar. But we've also seen an increase of gold.
Very much, yeah.
So there hasn't been that negative inverse relationship from the U.S. dollar rising and gold dropping, or vice versa. They've both been going up at the same time, which is interesting because of everything that's happened with Brexit.
Right. Well, I think it shows the extreme fear in the market. They're going for any kind of safety, especially people in Europe, people in China, and stuff like that. Yeah. And the thing about gold, and you mentioned it acting like a currency again, which I think is so smart, because it's the currency you can't print. Yeah. And so that makes gold so much more attractive.
So much more valuable. Yeah. So in my opinion, I think there's a lot of upside in gold from here. I think it has a lot to do with these negative interest rates. I think it has a lot to do with, in my opinion, we're in a very strange deflationary period. You know, gold has often been an insurance in inflationary periods. But I think you're also seeing it now in this deflationary period where you've got negative interest rates. They're trying to grow economies, but they're not able to. So what am I going to go to? A safe haven like the U.S. dollar or gold? And I think the U.S. dollar has big issues ahead of it. However, at the same time, it is the world's premier safe haven currency. And so particularly what's happened with Brexit, the fear there, the pound, the euro going down, going to the safe havens of the U.S. dollar, But I think the ultimate value will be going to gold and gold equities because it's really retaining that value, and you can't print it.
All right. Well, thanks for your insight on this because you mentioned many of the same points I do, but I don't want them to think that I'm just a crazy old coot. Someone else actually believes this, so that's good.
But I will say this, just as a closing remark, I'll say this: I'm not a gold bug.
Mm-hmm.
I believe there's fundamental value in owning a portion of gold or gold equities in the portfolio. I think that if you're interested in higher risk opportunities with gold discoveries and juniors, if you know the industry well, if you know how to analyze these types of companies and are willing to put some risk capital into some of these juniors and gold itself, I think there's tremendous upside, not only if the price of gold moves, but if a new discovery is found.
Right. So. Okay, great. Thanks very much for speaking to my subscribers. Folks, thank you so much for tuning in. I'll have more for you from Vancouver. This is Sean Broderick for the Oxford Club.